of gold was broken for the first time in history. Gold has traditionally been thought of as the safest, most reliable asset in the world. Thus, all this enthusiasm for gold cannot be but related to anxiety for the future of global economy. Let's learn from our expert the implications of skyrocketing gold prices and their outlook on this hot commodity.
Gold prices have been recording new highs day after day. Gold futures for August on the New York Mercantile Exchange ended $12.30 higher on Monday, July 18th, at $1,602.40 per ounce, setting a new historical high. Gold prices are now in its longest rally in 30 years, causing a frenzy in global financial markets. Analysts say that the gold buying rally is being brought on by anxiety regarding the American and European economies. Another cause for skyrocketing prices is increased demand from India, a major rising economy which is continuing in its fast-paced growth. Markets are predicting that gold prices will continue to rise in the future. In light of this outlook, experts are pondering the consequences of high gold prices for the Korean economy as well as the world. On today's In Focus, we bring you the insights of our experts on the new gold boom.
Welcome back. To discuss today's topic, we have two expert guests in the studio. Sitting on my right is Dr. Song Won-gun, who is Director at the Division of Research Planning and Cooperation, Korea Research Economic Institute. Welcome to our program.
Thank you.
And sitting on my left is Mr. Kim Kyung-hun, who is Research Associate at the Samsung Economic Research Institute. Thanks for being with us today.
Yeah, thank you for having me.
Well, the price of gold has been increasing very rapidly in the international market. So I want to start our discussion why it has increased so rapidly. And then what is the current prices of the gold in the international market?
Okay, on July 18th, the price of gold broke the $1,600 barrier for the first time in history. And after rallying for 11 straight sessions, the longest streak of gains since 1980, it rose to $1,604 on the 19th of July. The causes are based on two main events, and they are currently pulling up the price of gold. Firstly, the US debt ceiling needs to be raised by August 2nd, or the government will default on its obligations. And the possibility of reaching a deal is increasing, but this uncertainty is continuously causing depreciation of the dollar. And next, the expansion of the gold production is limited despite the rising gold prices. The cost of gold mining is increasing, and gold reserves cannot rise significantly as gold mines are becoming exhausted and the labor cost is rising fast. In 2009, gold production rose 7% to 2,572 tons due to high gold prices, but it was below the level of 2,646 tons in 2001.
I see. Wow, it's very rapidly increased, I think. Well, Dr. Song, well, there should be some fundamental causes for the rise of the gold prices in the international market.
Okay.
What is it?
Yeah, as Mr. Kim said, the cause of the gold price rise based on two factors. One is the U.S. debt ceiling problem, and the supply of gold is limited. This is the main reason. But the more fundamental cause is, I think, that gold is regarded as a safe haven when other financial markets are in turmoil. And U.S. dollar or U.S. Treasury bond is also viewed as another safe haven to the investors because U.S. dollar is the key currency and U.S. Treasury bond is the standard asset in the global financial market. But since global financial crisis broke out, the U.S. Federal Reserve Bank pumped the dollar into the market to revive the economy. So U.S. Fed took the measure of quantitative easement twice, and so the money supply or supply of dollar increased drastically, and then the dollar has been weakened. So weak dollar encouraged the rise of the commodity price, including gold price. This is one of the main reasons, I think. Then. And as Mr. Kim said, debt ceiling problem in United States is the main cause of the weak dollar and recent gold price rise. But the fundamental cause of the gold price rise is in that economic recovery of U.S. and Europe has been stalled. And the debt crisis in European Union, including Greece, is getting worse. So in the U.S., housing market is in the slump, still in the slump, and the unemployment rate is 9.2% right now, which is very high, and an increase in consumption and demand is hardly expected in the near future. So the U.S. government is considering additional measures to boost the economy, such as the third quantitative easement, or this kind of gloomy prospects of the U.S. economy. It discouraged the investor to invest in other financial markets except gold. That's why one of the main reasons for the gold price rise.
Yes, you mentioned about the gloomy outlook on the European and American economy. Maybe it can be one of the major reasons or causes for the dramatic rise of the gold price in the international market. Along with that, actually, there is another group of scholars who insist that because of strong demand for gold in India, that is one of the main another reasons or causes for the increasing price. I mean, price increase of gold. Yeah. Is it true?
Yeah, that is true to a certain degree. Traditionally, gold prices rose from September to May and stabilized or fell during the summer. This is because people in India intensively bought gold between their widely celebrated festivals, Diwali in September and Akshaya Tritiya in May. And on the other hand, as there are no major festivals between June and August, gold prices tended to rise from fall to spring in the following year and drop in the summer. But recently, however, the pattern is changing as the number of rich people is rising rapidly in India.
I see.
They are buying up gold all throughout the year because they regard gold as an important investment vehicle. Naturally, the seasonality of the consumption of gold has somewhat vanished. And according to UBS, the gold sales in India doubled in June compared to the same month last year.
Doubled?
Yeah.
Wow.
And the price of gold has risen by 4.5% since mid-June this year.
So certainly there is a strong demand for gold in India. But along with India, well, as far as I know, the Chinese people also liked gold, well, traditionally. I don't know, they still have those kind of preference for the gold right now. But certainly there is another analysis that because of strong demand for gold in China is another reason which accelerate to the rise of the gold price in the international market.
Right.
What do you think about it?
I agree with that point. And then, as we know, China is the largest buyer and holder of the dollar-based assets, such as the U.S. Treasury bond. But as we know, the U.S. Treasury dollar is weakened recently, and because of the concerns on U.S. default, due to the debt ceiling problem right now, so U.S. Treasury bond is not as safe as the past. So China is diversifying its investments. So it invests not only on U.S. Treasury bond, but also on increases the investments into gold. So demand of gold in China doubled in 3 years.
Oh, doubled as well?
Doubled in 3 years. And in India and China together made up of 57% of first quarter global consumer demand for gold this year.
57%?
Yeah, 57%.
Wow, it's very huge, isn't it?
And China alone made up 39%, almost 40% of the first quarter gold demand. So India was the world's largest gold buyer before, but right now China overtook India this year as world's largest gold buyer. So in China, investments in gold are encouraged by government authorities in order to diversify their capital reserves.
I see.
So, and gold is regarded as the hedge against inflation. So right now, the China is suffering from soaring consumer prices. It's already almost more than 6% right now. So the increase in gold demand in China was huge in recent years. So it has contributed drastic rise in gold price.
I see. Well, as far as I know, the gold prices historically rise when the faith in paper currencies erodes. So there should be some times in the past when gold prices show dramatic rise. And then, anyone could explain about when and how
Yes.
did they happen?
Yes, the price of gold shot up when the US went off the gold standard and adopted a floating exchange rate system in the 1970s. That was because people were uncertain on how to prepare against the fall in the value of the asset, denominated in the US dollar, while inflation was rising. And also, the demand for gold increased in turbulent times, like during wartime, or when the global economy or international political situations became unstable. Yeah.
I see. So let's talk about the, well, so far we have discussed about causes for the rise of the gold price in the international market, but from now on I want to talk about its implications. So, well, the rise of the gold price could affect the Korean economy directly or indirectly. I know it's not easy for us to discuss about the effect right now, but I want to ask you what kind of effect the Korean economy will get from the rise of gold prices.
It's very hard to tell how the gold price affects the Korean economy, but usually gold prices rises when global financial markets are not stable. Right now, we know that in U.S., the U.S. economy is not good, and U.S. government has the kind of a debt ceiling problem, which can lead to the default of the U.S. government. And then in Europe, there is a debt crisis, and then Greece's debt problem is very serious, and then it might spread to other nations in European Union. In times of that kind of time, the value of Korean won might be falling. In times of global financial crisis, the value of Korean won is falling. But gold prices stabilized when global economy and global financial markets are in a good shape. So in these times, it is very hard to expect the moves of the Korean won or exchange rate. So if the Korean won is strengthened by the gold price decline or stabilization, it will hurt Korea's export competitiveness, but it's very hard to expect. But we cannot expect the direction of the Korean won when gold price falls. So, but anyway, but we need to increase the investments in gold, I think, because of the gold is kind of a hedge against inflation or hedge against the global financial crisis. So the greatest advantage of investments in gold is the stability. So it'll be a hedge against a decline in value of Korean won.
So you mean that well, as you know that there have been many financial products for investment in gold in Korea. So do you think that is good? Huh? So you explained the reason why, I mean, evaluate the investment in gold as a way to make profits.
Yeah, right, make profits, or I think it'll be more like a hedge.
I see.
More like a hedge. And it is also a hedge against the drop in stock prices because gold price moves opposite to Kospi index. So it might be good for the investors to invest in gold as kind of as a portfolio or a safe haven.
Do you have something to add?
Yes. Such products are currently providing high rates of return, that's true. But however, when investing in gold, funds or gold-related ETFs, investors must thoroughly study other variables such as exchange rates, because gains from gold price rises will deteriorate if the $1 exchange rate falls, and investors may even record a loss as a result. Yeah.
Well, on the top of the discussion we made, we can find another kind of the distinct trends among the central banks around the world. Many central banks they want to increase the gold reserves. So, what is the situation like in Korea?
Compared to other major economies, the amount of gold that the Bank of Korea is holding is very little.
Little.
Yes, the Bank of Korea currently holds 14.4 tons of gold. For the FRB, 8,134 tons. And China, 1,054 tons. Yes. But experts have been advising that the Bank of Korea should expand its holdings of gold. And the Board of Audit and Inspection of Korea urged the Bank of Korea to increase its investment in gold in November 2010. This is because the currency composition of the central bank's basket is concentrated in the US dollars, euros, and yens.
I see.
Yeah. And the diversification is likely to be realized now because oil price has been spiking since the Middle East unrest began. And as Dr. Song said, the US dollar is weakening. And the traditional status of advanced economies, currencies, as safe havens is losing its status, while the gold is now expanding its position along with other currencies such as the Chinese yuan.
I see. So the Bank of Korea should increase the gold reserves.
Yes, to a certain degree in order to diversify
I see.
And hedge the risks
I
against the depreciation of the other major currencies.
I see. Do you have something to say?
As we have seen recently, the currencies of advanced economies are weakened and they are losing their status as the dominant currencies and safe havens. So we have seen the dollar is weakened but gold is gaining very much recently. This trend tells that gold is becoming one of the most important assets. So increase in investment in gold is needed to protect the Korean financial markets against the instability in global financial markets and currency markets.
I see. So, what is your outlook on the price, gold prices? Is it continuing to rise in the international market?
There are several factors to determine the gold prices in the future. So, I think that if the U.S. government or FRB continues to pump the dollar into the market, it will cause global inflation and the price of gold will continue to rise. And if the Eurozone crisis and that problem in U.S. Will be getting worse, right now there is a bad news and good news every day, so it's very hard to expect. But it'll be getting worse. The price of gold will continue to rise. But however, if these problems are eased, gold price will be stabilized. So it depends on the moves of the economy and that problems in advanced nations such as United States and the European Union. But even though the problems in advanced economies will be eased, the demand from emerging nations such as China and India will grow, I think. So gold price might be expected to show a sustainable rise in the future. So the demand growth combined with the lack of supply, a limited supply, might create a high rise in gold prices. But how much or how long, I don't know about that.
Yes. Maybe you have something to add.
Yeah, following on the second point that Dr. Song made, the gold demand of developing countries in general, whose property markets and stock markets are immature because their financial system is relatively less developed, tend to be high. And also, people in countries with low real savings rate buy gold to defend themselves against inflation. So as long as India and China do not suddenly stop buying gold, there will continuously be a supply shortage. And even some analysts even predict that the price of gold will surpass $2,000 by 2014 and rise to as much as $5,000 by 2020.
$5,000?
Yes, it's not my prediction. But some analysts say that. Yeah. This may sound like an extreme scenario, but considering the high inflation environment in emerging economies, the rise in the price of gold is likely to continue to rise in the future.
I see. So if both of you agreed that the prices of gold price is expected to rise continuously for a time being, then there should be some effect on the global economy. But Dr. Song already mentioned very briefly what kind of the problems we will have if the gold price continue to rise.
Firstly, the direct effect on the global economy will be limited as it's the outcome of the global uncertainties in the US and the EU. So if those problems get resolved, the gold prices could stabilize. But however, in the long term, as I mentioned, because of the demand side, the demand is increasing rapidly in the developing countries. The price of the gold will rise. And how they will affect the global economy, investors will have to diversify their basket of currencies or commodities or stocks. And if the gold keeps on rising, and if the capital from risk asset draw rapidly from such as a stock market into the gold, they might have some impact on the financial market.
I see. I would like to follow-up question to Dr. Song. You explained that, well, it is quite difficult to expect the rapid recovery of the European economy and American economy, which means that we cannot curve the rise of the gold prices in the international market. Do you really think that there is no other way to curve the gold prices in the international market?
I think that the demand for gold, the reason for demand for gold is rising in the developing countries like China and India. The reason is that they don't have a sound financial market and sound financial institutions, because so they are seeking gold very aggressively because they don't have sufficient amount of other financial products. So to nurture the financial markets and financial institutions in the emerging economy, that might be the one way to curb the price rise in gold.
I see. Well, certainly it is not easy.
It's not easy.
Yes. Do you have any idea about the curve, the rise? Gold
I agree with Dr. Song that the financial market needs to be developed. Also because the savings rate in China is extremely high, and it's acting as a negative factor in economic development in the long term. So developing a financial market and perhaps insurance market is also very important.
We discussed about the way to curb the rise of the gold market, international market, but certainly the Korean government should do something, right? Because when you look at the economic structure of the Korea, we are heavily relying on external trade, so we cannot avoid being affected by the rise of the gold price in the international market. But we should do something, right? Because to stabilize our economy and then keep the momentum economic development. So we should do something. Could you have any recommendation to the Korean government?
Korean government needs to diversify its investment because it heavily relies on dollar-based assets right now. And then it is also, the Korean government is right now diversifying its investment into euro or yen-based assets, but I think we could expect that price of gold rises sustainably in the future. So the Korean government needs to increase the investments in gold in the future.
I see. Do you have anything to add up?
I think he made a perfect answer. So.
Okay. So today we discussed about the causes for rise of the gold prices in international market, and also we discussed about its implications on the Korean economy and the global economy as well. Well, Dr. Song Won-gun and then Mr. Kim Kyung-hun, thanks for being with us today, and it was really helpful for us to understand what happened and in the international market regarding the rise of the gold price in the international market. Thank you for being with us today. Thank you.
Thank you very much.
Well, this has been Shin Sang-yeop in Focus, and see you next time.